Welcome back to the channel. So today we're going to dive into a really popular topic these days and has been gaining a lot of traction in the financial discussion, and that is de-dollarization, right? So is the world really ditching the US dollar? Now you might be hearing this term floating around. It is something that has been accelerated by events due to the Trump tariff, right? And basically the tariff are acting as a catalyst, right? Sparking a crisis of confidence in the US dollar. So the idea here is that the other countries might start to move away from the US dollars in their international dealings, right? And not hold it any further as the reserve currency. Now, this started recently when President Trump's reciprocal tariff caused the stock market to crash. And the typical reaction from investors is to seek safety in assets that they find really trustworthy and it will really hold its value during crisis period. And that has traditionally been US treasuries and therefore the US dollars. But it didn't quite happen this time, right? So even the co-founder of BlackRock said that we are seeing something quite unusual here where the treasury yield is going up, right? While the dollars are weakening when the stock market is going down. So he described this as an alarming trend and a possible red flag suggesting something more profound than just a normal deleveraging at play. This leads to a big question, which is the dollar no longer the world reserve currency? Now the answer according to all the information is that the US dollar is still the reserve currency, but it is definitely losing ground. Looking at the data, we can see that it has been a steady decline of the US dollar in the global currency since 2016. And this trend extends all the way back into the past 25 years, right? Dropping from around 70% to right now just about 60%. So if this is not a new phenomenon, why the concern? Now the concern is that we could be seeing this trend accelerating. Now it is crucial to understand that while this is actually happening, it is not a straightforward case of US dollars being replaced by another single currency, right? So who is the US dollar losing ground to? Well, the data seems to suggest that it is losing ground to a mix of other currencies. And this includes Japanese yen, British pounds, Canadian dollars, Australian dollars, Chinese renminbi, Swiss franc, and many more. Essentially, the US dollar is being replaced by a basket of multiple currencies rather than a single dominant alternative currency. So when the Treasury Secretary Scott Bessent said that he is not worried about US dollar losing its status and being replaced by the Chinese renminbi, I think he's not wrong here, because the real issue, as we have seen, that we need to deal with is the broader trend of diversifying away from the US dollars into various other currencies. Now, why should we care about the US dollar status as the world reserve currency? Well, it comes with several significant benefits, right, for the US dollars as US stock market investors we need to be aware of. One of the main advantage is the lowering of borrowing costs for the US government, because many countries trust in the US dollars and are willing to lend money at a lower interest rate. Another perk is what we call the spending privilege. This allows Americans to consume way more than what they produce without a currency collapse. And finally, being the reserve currency gives US an increased financial influence and global leverage, allowing for things like imposing economic sanctions and not having any significant impact on its economy. However, there's a clear trend of country losing faith in the US dollar, right? There are several reasons for it. Firstly, of course, is the fact that the US government has been printing trillions and trillions of dollars, leading to a significant budget deficit with a huge amount of debt and with interest that they need to keep on keeping up every single year. So with the unsustainable debt level and rising interest rate, right now the concern is, what if the US collapse and is unable to pay off the interest? If that happened, that will really impact the trustworthiness of the US dollar. And lastly, adding fuel to the fire, President Trump's tariff is just pushing a lot of his allies away from using US dollars and seeking other alternatives. So the impact of the tariff is really beyond just the stock market. The reciprocal tariff, when initiated, the US bond market actually started crashing, right? In fact, the bond market experienced one of the worst weeks in decades, which is highly unusual when the stock market is going down, right? With the US Treasury yield increasing, that means interest rate is going up, right? And that could easily lead to another event of inflation. And I think President Trump himself take notice of that, right? After the bond market had a really bad week, together with the stock market, he actually rolled back some of his tariff plan. And this might be a reason for the 90-day pause on the reciprocal tariff, although President Trump himself denied that was the case. Whether you believe that or not is really up to you, but to understand the mechanics here, if countries are trading less with US dollar due to tariff, they need fewer dollars. If they need fewer dollars, they might just sell off their US treasury, which can cause the treasury market to start dropping and causing the interest rate to increase. So overall, I think the market is reassessing the global effectiveness and attractiveness of the US dollar as the reserve currency and is undergoing an increased rate of de-dollarization. So what can you do to protect yourself? Well, speaking for myself, and I would like to say this is not investment advice, my strategy is to diversify a little bit more into other assets that truly hold value during this period, such as gold and silver. While I still hold on to stocks of great businesses, having exposures to precious metal like gold and silver is a good way to hedge against the currency fluctuation and potentially the US dollar's weakening. Now for me, in addition to holding physical gold, actually the most straightforward way is to actually buy into gold and silver ETF, which is GLD and SLV. And personally, when I'm considering this, I am taking a long-term mindset approach using these assets as a way to stabilize my portfolio. And really, all is not that bad for the de-dollarization, right? Because should the US dollar depreciates in value, naturally we will expect good businesses that are exporting out of the US to continue to make even more profits, right? And when the US dollar is going to reduce from here, naturally the US stock market is going to increase just to maintain its original value. So while the US dollar right now is still the world reserve currency, the trend of de-dollarization is really undeniable, some may even say inevitable. It is a really complex situation with many factors at play, but I think one thing we need to take note of is that regardless whether the US dollar is going to be de-dollarized or the tariff is going to be here or away, I think one thing that we are quite certain is that inflation, it is upon us. So for me, in addition to holding to stocks, gold and silver, I also want to hold on to the existing real estate that I have, because when the whole world undergo a de-dollarization and inflation event, right, you would expect hard assets like real estate to really appreciate from here. So I hope you guys like the breakdown and this has been helpful to you, right? So you want to stay updated, do like and subscribe, and I'll see you next time.